Hello folks, welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 19th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how that all comes in to impact the markets with some of my market analysis. I'm going to do the same thing for you folks in these market commentaries, but I'm also going to talk about option strategies I'm implementing into my portfolio based on those assumptions I come up with in my market analysis. And for you folks, we've streamlined the process for you guys to find the optimal option strategy for any given assumption. What we do is we're trying to spot the strategy that fits the pricing. And I show you how to do that in these webinars. We aren't just going out there and buying a call for a bullish assumption. No, we need to know if those prices are expensive or cheap before determining our strategy. And I'll show you how to do that in these webinars, like I said. All right, so without further ado, let's get on with it. Oh, one other thing, if you like this video, please go ahead and smash that like button for me. It really does help us out. And across the pond, economic data, pretty light, other than we got some CPI numbers, which is Consumer Price Index. This is going to be an inflation gauge coming in at 1.6%. That's in line with expectations. And if you strip out like food, energy, tobacco, and alcohol, it comes in slightly lower than expected at 0.7%, expected to be 0.8% there. And then moving back over here to the United States, we got our crude oil inventories right in line with expectations at 1,300,000. It's supposed to be 1,500,000, but for the most part, that is nailing it. Pretty good on that number there. Also, later on this afternoon, we get the FOMC meeting minutes. That's going to be really digested as they are going to be looking for the wording and how they are changing the inflation expectations. Things like that is going to be what's keyed in on. And we do have another Fed governor speaking in today, Bostic speaking. All right, markets. Crude oil inventory, or crude oil, like I said, the inventories were in line with expectations, but we are seeing a pull back in crude oil by almost $3. At one point in time today, we were testing the 78 Fibonacci there, had blown right through the 50-day simple moving average. Now we're just slightly above that. It feels like the broader markets are really trying to regain some of the losses that we experienced right off of the open this morning across the board in everything except for maybe gold, because Bitcoin was down 25% at one point in time, clawing back almost half of their losses at this point in the day. But yes, we tested the 30,000 handle. We came really close to that on the low, breaking into a 29 handle, which would have been pretty scary for most people that had gotten in recently, especially on the Elon Musk Tesla pump and dump. This is right around where he started talking about adding Bitcoin to Tesla and his own personal accounts. Now we know we got out of his personal accounts, but he tweeted out today, or Tesla tweeted out today, the diamond hands. I'm holding on to Bitcoin, I guess, is what he's trying to signal everybody out there. We did get a little bit of momentum off of that tweet. So Elon Musk really making this market move all over the place, adding all kinds of volatility. But we can see Bitcoin is down while we got gold futures moving higher, $9 shy of that 1900. I think that we are probably going to go up and test this Fibonacci here pretty soon. Now this lines up with the 2009 high, I believe, in the Fibonacci's here. So that goes way back to the financial crisis when we had those highs. That is going to be something that is in everybody's mind as we start moving higher. Now the VIX in the 20s again today. We went up and tested the 30s. I thought we were, or looked like we were going to go up and test the 30s again. I thought we were going to go up there right off the bat when we opened up in the morning, as we opened up very weak. As soon as the day market, open market session started, we started seeing some strength in these equities. It feels very strong to me. As you can see in the NASDAQ, we came down, tested that point of control, but right now we're back up there near that trend channel. Dow Jones Industrial Average, similar situation here, coming down and testing those 50-day simple moving average. Now, I've talked about this time and time again, folks, that we are going to see that come into the realm here as we start seeing pullbacks. Those are some healthy pullbacks that we're seeing in the equities. But like I said, the strength throughout the day is encouraging. here in the equities. With Dow, E-mini S&Ps are also off by 41, but you can see here as the overnight inventory was very bearish today, the day session really trying to get some momentum to the upside. I think I would lean towards the risk for the rest of the day is more towards the upside than it is the downside here in and around these markets. Now, something I wanted to talk about yesterday, and I forgot to talk about this, we've already mentioned a few times, several times probably, about the AT&T trade. AT&T spinning off Warner Brothers that they had just bought like 3 years ago, Time Warner, and moving that into Discovery, and they're trying to create this massive media company there. Something to note immediately, almost, if not sooner, Amazon comes out and starts talking about buying, who are they going to buy? It's somebody big. And I can't believe Amazon, MGM Studios. So the big question is, are they going to have exclusive right to all of the content that MGM produces? Now think about this. We have movie theaters and everything else. Is it going to be all on Amazon Prime? We'll have to keep our eyes out on that. That is not a done deal, but those are the rumors that are circulating. Anyway, we can see Amazon is off a little bit on today, but well off the lows and near the highs. Yesterday, settling below that 50-day simple moving average gave us a little bit of weakness coming down to test that point of control. Now remember, I'm still short the 3,100 puts in there that I might end up taking into my account because I only have a couple of days sweating it out. And LULU, I am going to probably cover my short puts and buy the stock because I'm still bullish in LULU, but it is well below my 320 puts in here, folks, and that they expire Friday. I don't want to go through the whole exercise process because that's expensive. It's a lot cheaper to buy stock. Remember, we're paying 0 these days, and to get out of the options is very cheap. On the last day, there's not enough theta in there to really worry about offsetting the costs that I'm going to be incurring in this whole exercise process. So I'm going to look to cover these trades, and if they don't get put to me in the next couple of days, I'm going to look to get out of those and then buy the stock, lower the overall cost basis on that. Look at it as if my break even is still 320. So we'll play that out kind of like we did with the IBM, the PIN, lower overall cost basis on these trades that we end up getting the directionality wrong on, just to stay ahead and stay mechanical. And that's all I've got for you folks. Like I said, tomorrow we are doing a webinar on swing trades, finding swing trade setups, and then implementing option strategies around that best suits that situation. I'm going to show you how to spot those type of scenarios in that webinar quickly, so please check that out. Also, remember, smash that or take that. All right, bye for now. Take it easy.